There's a price run that always took place at a very specific time trading bonds. And once I discovered that, I locked onto that and said, I don't care about currency futures. I'm a bond trader. I'm a bond trader. Because I saw something in that market first as it relates to time. And I said, well, now I didn't know right away. It was months and months in the first year of me doing it. I was like, wait a minute. I'm talking to my uncle and I'm telling him, I said, Uncle Stan, like I got something in bonds. It's just so good. But I'm afraid to talk about it because I'm afraid if I talk about it, I'm going to jinx it. And he's already proven it at that time. He's not interested in listening to me because he wants to be a contrarian. I'm buzzing on this idea that I got something that nobody else has talked about. No one else talks about this. I was even afraid to ask Larry Williams by writing to him and saying, listen, because I was like, maybe he doesn't know. And if it's really, really good, he'll treat it like he did with the turtle stuff. And, he'll teach it. I didn't want to share it with anybody. I was like, this is so good. I don't want to share it with no one. And I said, you know what? Let me see if I can start doing that same thing in my previous favorite markets, the currency futures. Wouldn't you know it? It's right there too. And I'm like, what in the world? How did this escape me? All this time I'm looking at 50-day moving averages and stochastics, 5 by 3 by 3 smooth on a Williams percent R and stochastic when they agreed it was a result, but the divergence occurred in one or the other. It doesn't matter. It didn't. Both of them didn't have to diverge for me. But when they were oversold and one of them diverged bullishly, the next day I'm waiting for the open and I'm waiting for it to go down below the opening, and I'm going to buy it on a stop as it goes back above the opening price. That was my methodology then. That was the very first inner circle trader. This is my step-by-step. I'm not thinking about it. I had to have a mechanism like that to get me in because I couldn't be in front of the phone, constantly call the orders in. So I had to put resting orders in, but I had to get that opening price, and I could get that on the quote track. As soon as it popped up on the screen, I got my opening price, and then I watched and see if it started trading lower. If it went lower when I was looking to go long the next day, and the next day is what I'm looking at in the charts, not the charts, on the quote chart with my truck, I would already have the phone number from my broker in my hand, running to the payphone, because that's how we did things back then. I had to have quarters in my pocket, run to the payphone, or if I'd run into an office building and I was doing the delivery for the snacks and cakes and whatnot, I would ask somebody, look, can I borrow your phone real quick? I got to call the office. And yes, I was lying back then, okay? But I was desperate. I had to get the orders in. So I would call, had to wait for them to answer the phone. Lynn Waldock. Yes, H-Death, please. Oh, 1 second. The whole time the market's moving around. Imagine doing this today with the volatility. It's nerve-wracking. But you place your order, buy on a stop above the opening price. Stop losses, back then I could tell the broker, whatever the low was, that's where I want my stop, one tick below that. That was my mechanism. I could only afford one contract. I was trading mid-AMs, which is kind of like the equivalent of a half a contract for today. Like we have mini, and then we have micros, which is 1/10. Well, back then, we could trade mid-AMs, which were like half the size of a full-size contract. And then I'd watch and stress about it all day long. And in the last part of the day, it would flurry and move in my direction. And when I was right, and I was like, yes! Woo! Do my Ric Flair strut, coming out of the truck, getting into a new office deal and get my inventory. I got to fill back up the machine. It was fun. It was fun when I was winning. When I was losing, it sucked. Because when I lost, I felt like I wanted to throw everything away. But the time-based aspects of what I was doing right, that has never, ever escaped me. I've never turned my back away from that. I've had entry strategies I created for myself, and I've abandoned them. I've had full-blown trading plans that I've abandoned. But I've never, since discovering these very systematic time-based price runs that occur in price action every single day, every single week, in every market, I've never left it. And last year and this year, I've been teaching it slowly. I've been revealing a lot of those things to you.